My name is Farhan. In today's video, you will solve question number 15 from 2019 Paper 2 exam. This question requires you to calculate four types of variance: the material price variance, the material usage variance, labor rate variance, and labor efficiency variance. I'll be solving the whole question with you together step by step, so make sure to follow through the entire content. Also, like this video and subscribe to this channel, and each of the four formula that we will be using today, I'll be putting them in the description, which you can check out later. With that being said, let's get started. AQA Limited has provided the following budgeted information. So here you can see we are given the budgeted production, 32,000 units. We are given the budgeted direct labor cost, which is £828,000, and that relates to all these 32,000 units. We are given the budgeted direct material cost of £1,972,000. We know the labor hours per unit of 4.5, and we also know the raw materials required per unit, which is 8.5 kilograms. Then we are given all the actual information. So we know the actual production was 30,000 units, and the labor hours per unit that we actually used was 3.5 hours, and the rate was 6.25 pounds per hour. Then the actual raw materials required per unit is given as 6.75 kilograms. So the first requirement of the question is to find the material price variance. So I'm going to write this formula for you here. And don't worry about it. I'm also going to put them in the description so you can just memorize them, or you can just copy paste them in your workbook. So the material price variance can be calculated by finding the difference between the standard price of raw materials and the actual price of raw materials, and then multiplying with the actual quantity. Now, there is more to this formula than what is shown here simply. Because you are in L levels, none of the numbers would be given to you straightforward. You have to calculate it yourselves and also understand how everything adds up together. So to begin with, we want to find the standard price that you can see mentioned in this formula. How do we find the standard price? Now, we are calculating the material price variance, which refers to the differences in price for the raw materials that we are using for production. The standard price can be calculated by taking the budgeted cost for all direct materials and then also including the quantity that we had budgeted per unit, which was 8.5 kilograms. So what we have to do is, if you want to find the standard price, you have to take the budgeted direct material cost and then divide with the total quantity. So the total quantity of raw materials here referred to 8.5 kilograms per unit multiplied by 32,000 units that we were supposed to produce. So let's do this calculation first. So budgeted direct material cost is £1,972,000, which is given in the table here. And then the total quantity for 32,000 units that we were supposed to produce should be 32,000 multiplied by 8.5 kilograms. So 32,000 times 8.5 kilograms. So I'm just going to write kg in short. So once you do the calculation, you should get pound 7.25 per kilo of raw material. So the standard price that we had set aside was £7.25 per kilogram. What is the actual price? So if you read the second last line of the question, the last line of the question, it says the actual materials required was 6.75 kilograms per unit, and the cost was 9.45 pounds per kilogram. So this is what we refer to as the actual price. So the actual price is given as 9.45 pounds per kilogram. So now we have got the standard price based on our workings, which is 7.25. We know the actual price that is mentioned in the last line of the question. And now we are left to find with the actual quantity. So the actual quantity here refers to the actual quantity of raw materials that we would use if we want to produce 30,000 units in real life. So how can we derive this number now? So there are no straightforward ways of doing this calculation. It's more of an intuitive approach and a logical understanding as you progress through. And you can only get better with this if you practice again and again and repeat your daily variance practice. So let's find the actual quantity of raw materials required for producing 30,000 units. So we understand that each quantity needs 6.75 kilograms, all right, based on the last line in the question. And given that we have 30,000 units in total that we have produced actually, then the actual quantity of raw materials becomes 30,000 multiplied by 6.75. So 30,000 multiplied by 6.75. The unit is obviously kilos because we are referring to quantity, and you should get 202,500 kilograms. So now that we have the actual quantity of raw materials required for producing 30,000 units, and we have the standard price and the actual price as well, we can just insert all these numbers and you should find the material price variance. Now, the answer comes to 445,500 pounds. Now, is this a favorable outcome or an adverse outcome? How do we justify that? So you can see the standard price for each kilogram of raw material was 7.25, but the actual price was 9.45. So if the actual cost went up, then that is an adverse effect for the business. So that is why you could just write adverse next to it, because our actual cost in real life for raw materials was higher compared to the standard cost that we had set aside for raw materials. Now let's calculate the second variance of the question, which is the material usage variance. So the usage variance here refers to the actual quantity of raw materials that we have used for 30,000 units compared to the standard quantity that we would have set aside for producing these 30,000 units. So what is the formula? So the formula can be written as the difference between the standard quantity and actual quantity multiplied by the actual price. Sorry, multiplied by the standard price. So this is the formula we have got for material usage variance, which is the difference between standard quantity and actual quantity of raw materials multiplied by the standard price of raw materials. Now, we already know the actual quantity of raw materials based on our calculations for the previous variance. We know the actual quantity of raw materials for 30,000 units would be 202,500 kilograms. And we also know the standard price, which is £7 and 25 pence per kilogram. Now, what we are left with is the SQ, which stands for the standard quantity. So the standard quantity that we would need to produce 30,000 units. So what is the standard quantity of raw materials that we would need to produce 30,000 units? If you check the table again, it clearly mentions that the quantity of materials required per unit is 8.5 kilograms. So that would have been the budget that was set aside, which refers to the standard measures. So if I want to find the standard quantity of raw materials for 30,000 units, I multiply 30,000 with 8.5 kilograms, which we would have set aside as the budget, and that should give you 255,000 kilograms. That would have been the budget for producing 30,000 units. So what you have to do here is simply replace the SQ with 255,000 that we have just derived. And then when you run the numbers in your calculator, you should get 380,625. Now, is this an adverse or a favorable outcome? You can clearly see that the standard quantity that we would have set aside for 30,000 units would have been 255,000 kilograms of raw materials. But the actual quantity we needed to produce these 30,000 units was significantly lower at 202,500 kilograms. So this reflects a favorable outcome for the business because the cost went down than what would have been budgeted originally. So that is why next to pound 380,625 pounds, remember to write favorable. And you should do this in exam as well because you will lose marks if you do not write adverse or favorable. Now we've got two of the material variances sorted. Now the next thing we have to calculate is the labor rate variance. So let me just draw a line here to separate our workings. All right. So how can we find the labor rate variance? So the labor rate variance is talking about the difference between the actual rate and the standard rate, and then multiplied by the actual hours. So I'm just going to write the formula here quickly. So labor rate variance equals actual rate minus standard rate times actual hours. Okay. So we have to calculate most of the numbers, I believe. So let's see what we have got. So first of all, what is the actual labor rate? If you read the second last line of the question, it says actual labor per unit is 3.5 hours at a rate of £6.25 per hour. So we have been provided with the hourly rate, straightforward. So that is 6.25. We do not know the standard rate, which is something that we have to calculate. What about the actual hours? Now, if you want to find the actual hours, this actual hours refers to the total actual hours required by the labor to produce 30,000 units. We understand that to produce one unit, we need 3.5 labor hours. So what are the total number of hours we would need to produce 30,000 units? We multiply 30,000 with 3.5. So 30,000 units multiplied by 3.5 hours per unit gives me the total number of hours that the labor would need, and that is 105,000 hours. Okay, what about the standard rate now? So the standard rate here can be calculated by using the budgeted direct labor cost, because we're talking about labor. So obviously we have to look into the labor numbers here. We have the budgeted direct labor cost of £828,000, and we know the labor hours per unit is 4.5 hours. So using this too, how can we find the standard rate? So standard rate would have been, so how do we calculate this? So budgeted direct labor cost divided by total budgeted direct labor hours, isn't it? So the budgeted direct labor cost is given as £828,000, which you can see in the second row of the table. And then the total budgeted direct labor hours. How can we find this? The number of units that we were supposed to produce is 32,000, and we knew that we would need 4.5 hours in terms of labor per unit. So the budgeted direct labor hours that would have been set aside is 32,000 times 4.5. So that gives me the total budgeted direct labor hours. So when you run this number in your calculator, you should get 5.75 pounds per hour as the standard rate for direct labor that we would have set aside. Okay, so I'll just replace this in the equation that we had written originally. So we have got the actual rate of labor hour, which is 6.25 pounds per hour, which is given in the second last line of the question. The standard rate is something that we had just derived, and we had derived it by using the budgeted direct labor cost and then dividing with the total budgeted direct labor hours, which gave us 5.75 pounds. And then we have the total actual hours. So when it comes to finding the total actual hours, we are thinking in terms of the hours needed to produce the 30,000 units that we have sold or produced actually, as given in the first line of the here, as given in the first line here, and that is 105,000 hours. So let's calculate this labor rate variance now. So you should get 52,500 pounds. Now I need you to think and tell me whether this is adverse or favorable. If you got the answer correct, you would mention it to be adverse. And why is it adverse? This is because if you check the actual rate, it's 6.25 pounds, which is higher compared to the standard rate of 5.75 pounds. So we would have to spend more for paying our labor in real life, in actual circumstances, compared to what we would have set aside, which was 5.75 pounds. Therefore, it increases the cost of the business compared to the planning that we had, and therefore this becomes an adverse outcome. So pound 52,500 adverse. So when you're ready, we'll now move to labor efficiency variance. So the last requirement of the question is to find the labor efficiency variance, which is basically finding the efficiency in terms of the actual and the standard hours, because efficiency is measured by how quickly the labor that we have are able to produce the units that we want to make, so which are 30,000. So let's find the labor efficiency variance. So the labor efficiency variance can be calculated by finding the difference between actual hours and standard hours and then multiplying with the standard rate. Okay, so the actual hours is something that we had already calculated in the previous step, which was 105,000 hours to produce 30,000 units, given that each unit needs 3.5 labor hours. That is 105,000. We do not know the standard rate. We do not know the standard hours yet. We would calculate that. And the standard rate is something we have just found to be 5.75 pounds per hour, as you can see here. So how do we find the standard hours? So the standard hours that we are going to calculate here refers to the standard hours that we had for 30,000 units, not 32,000 as mentioned in the budgeted production, because otherwise the math wouldn't align, because all these numbers refer to 32,000 units being produced, if that makes sense. But because we have produced 30,000 units, we always need to make sure our numbers are adjusted for the actual production volume. So the standard hour that we have to find now is for 30,000 units that we have produced actually, and what would the budgeted labor or standard hours would have been for producing these 30,000 units. That would be 30,000 times 4.5. So where do we get 4.5 from? So in the table, it shows the labor hours per unit to be 4.5. So which is the budgeted labor hours per unit that we had set aside. And if I want to find the standard hour for 30,000 units, then we just simply multiply 30,000 with the labor hours per unit that we had budgeted, and that is 4.5. That should give us 135,000 hours. So within the formula, we had to find the difference between actual hours and standard hours for 30,000 units, and then multiply that difference with the standard rate. The standard rate is 5.75 pounds per hour, which we had calculated for the previous variance. The actual hours for 30,000 units we already know is 105,000. And how did we get that? We have 30,000 units we produced and we multiply it with 3.5 labor hours per unit. That gives you 105,000. The standard hours is 135,000. As you can see, we have just found the standard hour for 30,000 units is 30,000 multiplied by 4.5 hours that we had budgeted originally per unit, and that is 135,000 hours. So when you do the calculations, you should get pound 172,500. And is this a favorable or an adverse outcome for the business? You can clearly see that the actual hours was significantly lower at 105,000 compared to the standard hours that we would have needed for 30,000 units. So therefore, this lowers the cost of the business compared to the original planning and is therefore a favorable outcome. So we can just write favorable next to 172,500 pounds. So do not worry about the formula. So there are four formula here for labor rate, labor efficiency, material price, and material usage. I'll be putting them in the description. You can check them out. Now the next part of the question requires you to prepare a reconciliation of budgeted to actual cost. All right. So when you're ready, we'll start with this one now. So the reconciliation of budgeted to actual cost. Okay. So if you want to do the reconciliation here, you have to do the reconciliation for 30,000 units that we have actually produced in terms of volume. Otherwise, it doesn't make sense to reconcile if your budgeted numbers were derived based on 32,000 units, while the actual results are derived on 30,000 units. You have to ensure that the budgeted cost has been aligned for 30,000 units, which is the actual production volume. So how do we find the total budgeted cost for these 30,000 units? Okay. So reconciliation. So I'll just okay. So we have two different types of costs here, which are the direct labor and the direct material. So we'll start with the budgeted direct labor cost for 30,000 units. I'm just writing DL for short. So budgeted direct labor cost for 30,000 units. Okay, for 30,000 units, how many labor hours would we have budgeted? 30,000 times 4.5, right? 30,000 times 4.5 tells you the total number of hours that we would have budgeted for 30,000 units. All right. What would have been the cost for this total number of labor hours that we would have budgeted? The cost is the £5.75 per hour, the standard rate that we had derived earlier for the labor. So 5.75, that is what we have to multiply here. Again, there's no straightforward formula for you to solve this. This is only going to get better for you with more and more practice because this is an intuitive approach based on the scenario or the context that we're solving. So 30,000 times 4.5 gives me the total number of hours I would have set aside for 30,000 units. And given that the standard rate per labor hour is £5.75, we just multiply all these three together and you should get £776,250. This is not a variance, so we do not write any favorable or adverse stuff. We just know the numbers straight away for the budgeted direct labor cost for 30,000 units, which is £776,250. Now, we're going to find the budgeted direct material cost for 30,000 units. All right, so I need you to brainstorm and think how you would answer this. So exactly similar approach to what we have done for direct labor cost. So if we were to produce 30,000 units, what would have been the total raw materials that we would have budgeted? That would be 8.5 kilograms per unit, which would have been our budget, multiplied with 30,000 units that we're actually producing. So that would have been our original budget. So 30,000 times 8.5. So this gives me the total budget in terms of kilograms that we would have set aside for producing 30,000 units. But we are interested in finding the cost. So we multiply with the standard price for these raw materials, which is something that we had derived at the very beginning of today's lesson. So we're just going to scroll back up and you will see that we found the standard price to be £7.25 per kilogram. Okay, so £7.25 per kilogram. So we replace this here. So what are we doing here? So budgeted direct material cost for 30,000 units. So the total raw materials for 30,000 units that we would have budgeted would be 30,000 units times 8.5 kg required per unit multiplied by £7.25 that we would have paid per kilogram. So that gives me the total budgeted direct material cost, and that should be 1,848,750 pounds. Okay, so we have got the budgeted direct labor cost and the budgeted direct material cost. Now, I want to find the total. I'm not gonna write this again. You can just simply add 776,250 with 1,848,750. You should get 2,625,000 as the budgeted cost, combining both direct labor and direct material for the actual production volume of 30,000 units. And why did we need to ensure the cost is calculated for 30,000 units? Because we're doing a reconciliation, and when you're doing a reconciliation, you have to ensure the production volume aligns with your budgeted numbers. So that is why, to begin the reconciliation with, I have shown budgeted cost of 2625,000 for 30,000 units that we would need. Okay, so once you have got that ready, now we have to go through each of the four variances that we had calculated and understand whether or not we should add or subtract to the budgeted cost of 2625,000. So we start with the material price variance to begin with. Okay. So the material price variance was 445,500 adverse. All right. So why is this adverse? Because our actual cost of raw materials was significantly higher at 9.45 pounds per kilogram compared to the original budgeted cost of £7.25. So our actual cost is higher. So whatever we had budgeted before should now increase in terms of finding the actual number, if that makes sense. So since our actual cost was higher, so the material price variance would be added to the budgeted cost for 30,000 units. We are going to repeat a similar thing for each of the other variances. The material usage variance was 380,625 favorable. And that was because the actual quantity needed was lower than the standard quantity for 30,000 units. So since the actual cost was lower, which resulted in a favorable outcome, because it is lower, we have to subtract it from the budgeted cost that we originally had for 30,000 units. So the material usage variance is subtracted here. What about the labor rate variance? Now, the labor rate variance was 52,500 adverse, and that was because our actual rate was higher compared to the standard rate, which means the actual costs were higher. So if the actual costs were higher, that should add up to the originally budgeted cost that we had set aside for 30,000 units. So that is why we're adding the labor rate variance of 52,500 adverse. Lastly, we have labor efficiency variance, which was a favorable outcome for the business because our actual hours were lower compared to the standard hours that we would have set aside for 30,000 units. Because our costs went down due to this favorable outcome, this should reduce the budgeted cost we originally had, and therefore the labor efficiency variance is subtracted. So once you just run all of these numbers together in your calculator based on who is added and who is subtracted, you should get 2,569,875 pounds as the actual cost that we would have needed for 30,000 units. And that's all for today's lesson. Make sure to post any other topics you would need me to cover in the comments down below. Thank you.